Okay, so we are going to go over the same thing again. And then, as I said, afterwards, I'm going to break it down a little bit more for you guys as much as I possibly can. Okay, but repetition is the key to success. The more we repeat, rinse, and repeat, the more you are going to gain that success that you guys are seeking. Okay, so as tempting as it may be to want to jump into a trade right now, which I genuinely want to do, I'm going to resist the urge to do so. And we're going to do some learning. All right, guys, we are going to do some learning. Okay, so let me go ahead and get that done. Let's find it. Let's find it. Where are we? Academy. This is the one. This is the one. This is the one. Da, 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 da. It's under strategies, isn't it? No, it's not under strategies. It's under academy. Oh, what? Yeah, it's here, isn't it? And we were on stars and POC yesterday. This is the one we are going to go back onto. Let's make it happen. Reason it does that. It's like party. Let's go for the party, guys. I know he turns it on any second now, and I don't want to.
Did you just boo me? Oh boy. Do I kick people out of the calls? Let's figure that out. Let's test that out on Hissy. You wanted to see a full tantrum, it would be full on. All right. Today we are going to talk about the phone would literally be blowing up. It would be on point. So, okay, today we are going to talk about the stars and the POC. Okay, so the first thing we're going to talk about are these big, beautiful stars. Okay, so these stars are super important. We talked a little bit about them in the first day. We talked about where they came from and what they do, just a little piece of them. And we're going to go over them a little bit more in depth today. Okay. So as you can see, we have in this little screenshot here, we essentially have all our stars. Okay. So the first one we're going to talk about here is we're going to talk about the stars. Okay. Okay. And the first one, we're going to talk about the level of strength. So essentially what the stars are telling you is that a higher high right up here or a lower low has been created. Okay. So higher high, lower low. Okay. So we're going to talk about what they normally do. Right. And usually when you get a higher high or a lower low, you're going to get a slight reversal. Now we're going to talk about the strength of some of these stars. So the size of the stars and the color of the stars, okay, indicate its strength. like how strong it's going to be, how important it is. Okay, so we're going to talk about these little yellow ones. Okay, the yellow stars are low strength. Okay, low strength. Okay, are low strength. As you can see, they have a little bit of a smaller reversal. Like sometimes it's only a few pips, as you can see over here, right? You got a few pips in between it. And it's in these very short time frames that it's just creating these higher highs, lower lows, higher high, lower low, higher high, lower low. You can see not very much in between, right? You can see, in between them, you're getting 5 pips or so. You can see there's one there, and there's a yellow one here, and a yellow one, right? You can see they show up a lot, and they don't have huge movements between them, right? So they have a little bit of a lower strength. How do we use those? Let's say we got into a position, let's say we got into this buy, and we didn't close it here, right? But then we saw a couple of these yellow stars. They can give us an indication that, hey, maybe this still wants to go in our direction, and we could potentially hold on to it. That's how you'd use kind of those yellow stars, right? If you got into this triangle, you didn't close it on this big pop up, right? Then you're like, okay, well, there's a couple of stars here saying that this potentially, a star on one of my EMAs, potentially this wants to move in that direction, and maybe I can hold my trade a little bit longer. I mean, if you would have held this trade a little bit longer, you could have got into a protected position. Maybe you got taken out here, but then you could see eventually it got to a TP, and that was through open, right? Okay, so stars. Definitely not muted. Definitely not muted. Nope. My cord pulled out. Okay, so these stars, okay, these stars essentially indicate lower strength, lower reversal levels. Like you can see a few pips between them, bouncing, and that's how you can try to kind of use them. You use them kind of hold on to your trades potentially. I'll be honest, I don't tend to use them that often. They don't really keep me out of trades. They might keep me in a trade potentially, but they don't really keep me out of anything. Okay. The next one are the blue stars. Okay. Okay. Now, the blue stars have a little bit of strength in them. I want to try and show you where the blue stars are not covered because there's a blue star down here. You just can't see it because the big old green star is on top of it. There's also a blue star behind that, but you can't see it unless you zoom right into them. So maybe we'll do that. And you guys can kind of see there's a little blue star behind it. Right? It's actually all 3 stars are sitting right there, but you can see there's a blue star behind it. Okay. So when these blue stars kind of come up on their own, they're usually going to indicate that there's a little bit more strength behind it. Right. You can see there's a blue star here. I would pay attention to that. I'd be like, okay, I'm in this buy still. Nice blue star. Okay, maybe I'll hold this a little bit more. Okay. These blue stars indicate a little bit stronger reversal levels. So they have medium strength. Okay. Okay. They have medium strength, which just means you're going to get a little bit of a bigger movement. There's a blue star here. There's another one behind that red star. Those ones are a little bit overpowering, but you can see just even if you get into here and you zoom into these, you can see there's a blue star there and a blue star there, right? Just a little bit blue star, just a little bit bigger movements. Okay. A little bit more strength. Okay. And the ones that are really important, which are the ones that I'd always pay attention to and I don't want to miss, are the red and green stars. Okay. Okay. They are high strength. I'm having a problem with this word today. Okay. Are high strength. That means that when you see a red or green star, and of course that they move, right? They're movable, right? So we got to be careful because they're not always just going to situate here. Okay. And you can see, right? This was the low. It created a low, broke this low, and created another green star, right? Right. You can see that when it breaks those lows, you're going to get another star, right? So this broke a bunch of highs, and then you got a nice red star here. Now they move. So the one thing we have to make sure is that they don't just pop and then stop moving. So we have to be a little bit careful with them about trying to trade them, which we can talk about more. But as you can see, look at these big moves between these stars, right? And if this breaks this level, what will happen? If this breaks this level, you'll get a red star, right? That little blue star pop there, and it looks like it's going to pull back first. But you can see these big movements. So we want to pay attention to these, right? This movement from here to here is, 240 pips. That's like a month's worth of pips right there, right? Reverse to here, reverse to there. Like it has this really high strength, and we want to pay attention to them. Okay, so that's what all the stars mean in their strength. Now we're going to talk about a couple things on how to use them. Okay, talk about a couple things on how to use them. Now let's see if we can find a good example of this. Okay, maybe this buy is a good example. Okay, let's go into replay. We're going to talk about how we can use them. Okay, go into replay. Okay, as you can see, that signal came and look what's right on it. Red star. Right? So this is a bit of an iffy trade. Now we could take this thing, we could protect against that red star. Maybe we would have got wicked out of it. But what we can do is we can actually chase it. And what we do is we chase this star once it starts to get our parameters. And we're going to go over more about the parameters and the assets later this week. So right? If we're looking for a 50, let's say we're looking for 50, right? Let's say 25, there's your 1 to 2, right? You would have been in on it right at that 238. Green star popped. You're about, I don't know, you're maybe 10, maybe 8 to 10 in blue when that pops. But what we want to do is potentially chase this. Okay, so what we sometimes you can take these scalp moves instead of getting 10, 20 pips out of them. Sometimes they're going to run, 40, 50, 60, 100. And what we want to do is we want to chase that star. So now as you watch it, and anybody who's using Killshot will see this, right? Is as this moves, it's going to continuously take that star. So that might have not been the best example, because that was a news movement. But as you chase this star, right? This star pops, you could move your stop loss and chase it. So what we want to do is we want to find sometimes, when this chart really wants to run, right? When this chart really wants to run, we want to just continuously move our stop loss. And then some of those scalps, which we'll talk about a little bit more here at the end of the week, right? Will turn in, instead of hitting singles, which we talk about all the time, taking what the market gives us and hitting these singles out and letting the singles add up. Sometimes they'll run into home runs where instead of getting 20, 30 pips, it runs for 100, right? And that's because you just followed along and protected against this potential reversal, right? That may come from this star, right? You can see this thing pulls back and maybe you got more out of it and kind of holds here for a while. And you're like, oh, that star's up here and this is kind of holding this space, right? You could push back up to it. Might witch you out there. But you can see, we're taking you out for sure. But you can see if that star popped and you're in this news, you could have followed it up, right? You could follow that up and you could chase it, which is going to protect you from the eventual reversal that wants to come from that trade. So we call that chasing the star. Okay. And it's something that we can practice as long as you're comfortable with getting that 10, 20 pips. Those star chasers will happen for you. That's a bit volatile there to show you that as an example. Maybe we can try this here. We'll just try this. This isn't the best signal, and I was going to show you it. It was on trend, and all those things have broke for 238, but it's on a blue candle. So maybe we would have taken it. We'll try this one too. Okay, let's say we take it at that break, right? We can see there's a green star there. Maybe we got into this thing here in the break of this 238. But let's just say we're in this thing. We'd say our stop loss is up here, and at least in those resistance levels, it's a little bit big. Let's do 50, a bit big. And then we can say it's 100, right? We can zoom out here and say we have 100 target. Okay. Now, what you can see is when it does start to take that star and move, right? You can start to chase your stop loss. And then you eventually get yourself in a position where you can trail it down and maybe you get a little bit more out of your trade, right? Starts to break here. breaks below. There's that green star, right? You're like, okay, green star comes, starts to break below the support. I'll move it here for profit, right? You can see then it jumps, right? It took the star from here and moved the star over there. Then you're like, okay, well, let's get behind this candle as well. And now you're, now you're running, you're protected at 50 pips as this is running down to 100, right? You can see bounce comes here and you can see green star again. And even if maybe you got protected here, you're like, all right, let's see if I get 150 out of it, right? Stretch my stop, stretch my TP a little bit. Let's move our stop back here. Now I'm protected at 80 as it goes down, right? So these are the ways you can chase that green star as these candles start to take it, right? Because you want to protect, because eventually, like you'll see, this star will put on the brakes and reverse. It'll come eventually, right? You can see, you're like, okay, there's that green star. Oh, starting to reverse on me. Eventually, it's going to come back at you, right? So you're in here, you're protected, okay? And you're moving down back behind it, the candle behind it, okay? You want to be in behind this candle, the next candle behind the star. Sometimes it's the same body of the same candle, right? This one would have taken the green star too, and you probably could have come down here and been like, oh, there's 100 pips, right? To protect against eventually that green star reversal, right? Which eventually, as you can see, that green star reversed, pushed all the way back up here. And if you didn't protect as that was falling down, you would have had probably a break even on there and got 5 pips out of it instead of taking 100, right? So that's another way on how you can use these stars, because they like to move. Why were these stars created? I talked about it earlier, is that as a scalper, I tend to struggle. I struggled in the beginning of being like, when am I going to get out of my trade? When am I going to protect my trade? When am I going to get out of it? How many pips am I going to take? Am I going to go to TP? All those things, right? All those questions you ask yourself in this moment when you're kind of looking at it and it's moving at a 1 minute candle at a time, moving so quickly. When you ask yourself those questions, that's when you're like, okay, well, I'm just going to chase this green star. And if it reverses, it reverses. Let's see how many pips I can get out of it. Stretch my TP, follow my stop, protect as we go. Okay. So that is the definition of your stars. It's what they are. They are a higher high and a lower low. As you can see, this was the low. And then when the candle took the next low, the star moved. When the candle took the next candle, the star moved, right? So you can see that it's constantly giving you a higher high and a lower low. And sometimes they're going to, eventually they're going to stop and turn into a reversal. Okay? Yellow stars, low strength. Blue stars, medium. Red and green stars, the higher strength, the ones to be very aware of. Okay? Because eventually they're going to give you these big reversals. Okay? So that is your little bit more in advanced training on some of the stars and how they work and what we use them for. And we're going to move on now to the point of control. Okay? Anybody wants to take a screenshot of that, go ahead, because I'm going to erase it. Okay, we are going to move on to the point of control. Okay, or POC. Okay, or POC. Okay, so what we're going to do here, we're going to show you what the point of control means. Okay, so a long time ago, we're going to go to the 15 to do this. Okay, a long time ago, I was following an educator who all she did was trade this point of control. She used a volume profile, okay, which shows you what the volume has been doing for a last, period of time. So what this thing does is it shows you, okay, what it's been doing essentially on the 15. It's programmed to show you what it's been doing for the last 6 hours. So just happened there. This has changed for me. Okay, let's see. Okay, so essentially what it does is it's going to show us, let's find the best last 6 hours. Where are you? 3:15. Okay, so we zoom in here and you can see that it's giving us, it's not very good. Actually, let me move. Okay, so as you can see, as we zoom in on this thing, you can see it's going to give you these red and blue levels. So the blue is buy volume. The red is sell volume. So a misconception here in trading, it's like I did some here, is that the highest point of volume is when it's moving the fastest. I don't know what that is. Okay? People believe that the highest point of volume is when the chart is moving the quickest. And that is not the case. It's actually the opposite. The more volume is when the chart has stopped moving and is starting to consolidate. Because when a chart is moving, say quickly like this, it's really only one type of volume. And as you can see, it's sell volume, right? Big sell candles. But when a chart starts to do this and stay in here and you have sell, buy, sell, buy, sell, buy candles, then you're getting both types of volume. That's where most of the volume is held. And so what this does for you on the 15 is it's going to give you the last 6 hours of volume. Okay? Looks like it just, okay, hasn't shifted on us. And as you can see, right, if you see this red, there's a red line that's inside this box, literally lines right up with our yellow line. It's giving us the highest level where the highest volume was over the past 6 hours, this red line, and that ours, the kill shot automatically does that. Okay, so as you can see, it's showing you kind of the top 10, top 12 moments here where there's the most volume. And then you can see some of them don't make the category because they're too small. And so you want to see where the highest volume is. Why do we want to see that? Why do we want to see where the highest volume is? Because when the chart starts to move away from it, right? Like let's say the chart's moving this way, away from that point control. That means in this level, the buyers and sellers were fighting, right? But there was institutions buying, there's institutions selling, buying and selling, buying and selling, and eventually, when it started to move away from this, the buyers are getting. If it's going up, the buyers are gaining control, and if it's going down, the sellers are gaining control. And everything we do on Killshot is to help us with direction. Help us confirm the direction we want this chart to go so we can join it. We don't want to fight the markets. We don't want to fight the institutions. We don't want to try and trade against them with limits and all these other things. I want the market to tell me where it wants to go, and I'm going to jump on. And the one thing I like to use Killshot example of is I like to talk about surfing. Right? I want to know when that big wave's coming. And when the big wave starts to come, I want to get on it. I'm going to wait. I'm going to paddle out. I'm going to wait for all these things to happen. We'll talk more about that, right, on these why deploy and control and 238 and all these things when we get into our confirmations on our next call on Monday. But I want to know the direction. And if buyers have control, pretty good chance the market wants to go up. If sellers have control, right, the market's heading this way, pretty good chance the market wants to keep going down. So if the market is moving up, okay, if the market is moving up from the POC, buyers have. Okay. Okay. So if the market is moving up away from the POC, buyers have control. Okay. Okay. And if the market is moving down, okay. Down, okay. Don't put that in there. Okay. Okay. And if the market is moving down away from the POC, then sellers have control, right? That means that buyers and sellers were fighting here. The market started to drop, sellers had control. Buyers and sellers were battling in here, started to move up, buyers took control. Okay, that means that's another direction that's saying, hey, the institutions are buying this thing. Let's find our way to get in there and get out of it, take our profit, and move on with our day. Okay. So that is how the point of control works. It's automatically doing this fixed range volume profile for you. Okay. Automatically doing this for you and giving you this yellow line. Right. And we can see we can use it on the one. Right. We can use it over here on the one. And it's exactly because we want to take, we're doing that top down analysis. We want to see what the 15 is doing and move it over to the one. Right? So that we can see what that point of control is doing on the one and know that, hey, a little bit longer time frame, sellers are kind of winning out right now. Right? And so anybody who's using this thing and using Killshot, the chart does this all for you. So if you look up here into this table, okay, you can see the POC on the 15, the 30, and the 1 hour. The chart is below it, which it's red, which would mean that the sellers have control on a higher time frame. On a higher time frame, the sellers have control of this market. So if we're using that as our confirmations, which we're going to go over in the next call, then that would mean that we'd be looking to join on a sell on the 1 minute. You can see that just happened. Probably not the best area, but you can see that just happened. Okay, so that's how the point of control works. You can see that it's taking 6 hours of volume on the 15. It's taken every time frame it goes up, it doubles. So on the 15, it's doing 6 hours. On the 30, it's doing 12. On the one, it's doing 24 hours. It doubles. Okay, and as you can see on all those time frames, okay, on all of them, the sellers have control right now. Okay, which stays on with the trend as well, which we'll go over that more in our confirmations. Okay, that is how the POC works. So it's automatically formulating what the volume is doing on a higher time frame. And I'll tell you, there's people who trade in this space only on that, only based on their volume. And Killshot's built to give you that automatically and put that up here into your little trend table. Okay, where it talks about the POC is on the bottom, the trend on the top. When we go over our confirmations on Monday, we'll go over what the trend, how this is telling you about your trend. Okay, so that is the stars, how we use the stars, what the point of control is, why we use it. So both helping us with directions and even some reversal levels so we can find our way on that direction. And this will do that for you automatically. Okay, so that is our last day of boot camp this week. This is the boot camp day 3, and the next call will be over our confirmations. Okay, the 5 confirmations of Killshot. We'll go over all of them and how to make sure that we take good signals. Signals that are the best for us to get the best probability. And then the last day will be assets. Okay, we'll go over all the assets, what's the parameters we use, how we trade them, and all those things. So those will be our next 2 days. And the recordings 1 and 2 are already up, and they're on my profile. And we will see you guys on Monday for boot camp day 4.
All right, so first things first, family. Let me know. Did that help again? Obviously, we watched it yesterday. But let me know, did that also help again today? Just to kind of solidify that one. 100%. Okay, perfect, right? So I have the kill shot scanner here, obviously with nothing on it. Just kind of, well, a little bit on it actually, because you know me, I can't help myself. Right. So first things first is we're just gonna run over again, slightly, what he was actually saying. I really like them on there. I'll just hide that for now. I'll hide. No, I'm not hiding that one. It's the same thing. What? Okay. It doesn't really matter. Doesn't really matter. Okay. So, now obviously when it comes to what he's explaining, I'm on the 3 minute at the minute, but I can go on to the 1 minute, not a problem. I wanna also after this, I wanna go through the confirmations as well, right? But just looking at this right now, what he was talking about, I'm starting to understand it a bit better after today, but for a bit lost by the end. Yeah, don't worry about it. Like you're gonna feel lost at the start, of course, you know. But that's what happens when you're developing a skill. Remember, this is a skill. This is a life skill, guys. Like this is something that is gonna change your life, right? So, as you can see right here, okay? Let me just move that out the way. Right. So we see the red star, okay? But we're not chasing the red star right now. What are we chasing? We're chasing the green star, okay? Now, I like how he explained that. Now, imagine if we're in this trade that is happening right now. So for me, I would put my SL above something like this, or potentially if there's a fair value gap, I would stick it just above the fair value gap, okay? And then this would be my point of entry, right? Now imagine we've got like our little triangle, which is kind of like, you know, our entry into that trade, or we can use the EMA's crossing, okay? So that is a very, very simple concept that we get in, we see the arrow, we see the EMA's crossing, and we take the trade, right? Now look, as the trade comes down, we're moving our SL. Now we're at break even completely. Look at that. That's a solid trade because I wouldn't move my SL. I wouldn't move, let's just get a horizontal line up quickly. I wouldn't put my stop loss below that first candle because you're going to get wicked out immediately. I would wait for the next candle to form. We've already pulled it down to break even. I would wait for that next candle to form before I did any of that because I don't want to get tapped out immediately from the trade. I want to follow this trade, okay? So I would pull it. I would wait for this move, okay? And I would slowly start to pull it down. Now remember, we are going to get pullbacks along the way. Now this is why it's important to have the lines up that I always put up myself, right? Why? Because we know that market is going to bounce off of these lines here, okay? Off of these areas here, these supports and the resistances. So if you have your support and resistance open, guys, right, then you know that, okay, cool, we've got one of these here. Market's going to probably bounce because what does it do? It ping pongs, ping pong, ping pong, ping pong, right? It literally ping pongs through the support and the resistance, okay? So I would not set my TP below, you know, you may have been able to do that, but remember, support and resistance is going to pull it back up. Now, you could just follow that one candle down and get taken out kind of here, which is fine. That is still a solid trade. But then look at all of that trade that you've missed, right? So when you are following trades, guys, look to the left, okay? Look to the left. Look at what market is trying to do. Market now is currently trying to take out the previous, okay? You're going to get pullbacks. There's probably another resistance, another support. Yeah, there is right here, at 165, 160. Yeah, there is one right here. Hence why it is pulling back. Okay, which is normal. So as long as you have your lines marked out like I do, then you're going to see where the market might ping through. Okay. So therefore, it will give you more of that trade. So you could pull it halfway down this candle, let it do its thing, or you could pull it just below the end of that candle, let it do its thing. You are still going to get some profit. Okay. Then once it breaks through this first one, then that is when I'd start to pull my stop just below it, right? I wait for it to move and then I'll start to follow it. Why? Because I'm coming close to the previous low, right? And remember, there is another line right here. Okay? There's another support right here. So this is what I would do. Okay? And then I would let it do its pullback. And then I would slowly kind of bring it down. Okay? So that is what I would do. So that is why it's so important, family, to know where these lines are that I mark out. Okay? Now, look, if you are somebody that has a couple of trade windows open like myself, because I like to do that, you see this here, this thing right here. Now, if you click that, yeah, whatever you mark on this chart is going to duplicate on this one, and this one, right? But if you have this unticked, unsynced, then you can use one chart for your lines and the other chart to work off of, right? So then you have them next to each other and then boom. Okay, cool. There's something right here, okay? Obviously, you have them lined up, yeah? Have them lined up together so the prices are the same, right? If that makes sense. And then where this is on this chart as well, right? So you would have known if you were using this particular chart, okay, cool. There's a line right there, okay? So therefore, you are able to use two charts in conjunction with each other, right? Using one to trade and using one for your guidance. That is if you wanted to do it on separate charts. You can have it all on the same one, but I know what some of you guys are like. You don't like too much clutter on a chart, which is fine. It's understandable. You see? But these things here are going to help you to understand. Now, POC. Look, it's trying to take control over POC now, right? So this is what I would do, guys. I would follow it. I would look at where the POC is. Okay, it looks like it wants to come down and take over and take out this here, right? This is your previous low. So again, that would have been one heck of a solid trade. Okay. Now remember what I said to you the other day. Yes, last night. If it breaks, it's coming down. And look, it's coming down. Right? It is coming down. So this market does have the potential of coming all the way down here to 148. Right. But again, you're going to get massive pullbacks along the way anyway. You're going to get your pullbacks as you do, because if it just went in one straight line, it would be easy to trade. Easier to trade, should I say. All right. So does that make sense from what you've just watched to what I've just said? right? You could have took that all the way down and look, gained massive pippage. Look at that, right? I think it's such a phenomenal way of actually trading. Okay. So let me know in the chat if that has helped you, just to, to even just a little bit more so confirm what Jay's just shared with us. The POC, does the trend table not say buyers have control? Yeah, here. If this is red, sellers have control. If this is blue, buyers have control. That is your POC, right? Your price line. If this is red, so why would the POC move down? Because as market moves down, the POC will move as well. Sometimes you'll see the chart, right? Let's say, for example, right, the POC was all the way down here. And you can see that there's a massive momentum move all the way down. Your POC is going to move because who has more control of pushing the market down at that given point? Sellers, right? Sellers have more control. Therefore, it moves the POC up. If they're taking, like, look, if it's dropping from all the way up here to all the way down here, sellers are going to gain more control faster. Therefore, it pulls up the POC, if that makes sense. Right? It's volume. Who's producing the most volume, which will determine where the POC lies, where the POC goes. So if the sellers are producing the most volume in this area, okay, over the past, what was it, 6 hours, he said, right? Therefore, sellers are gaining control. Therefore, it's almost like they're pulling the POC towards them. Does that make sense? Let me know inside the chat if that makes sense, because at the end of the day, it doesn't matter what any of that says. What matters is, well, actually, it does matter what that says. It matters what this says. It matters where the POC is, of course, but that's if you're trading point of control. Now, all you need to worry about is, am I in a sell? Have sellers got control? Am I in a buy? Do buyers have control? Whoever has the control over the market and you are taking that trade, currently, buyers still have control. The market didn't move down enough for them to take it. They almost did. It came through, but because it wicked through, that means that buyers still have control. Okay? Because what? Look, a massive candle, it came down massively, but look, that was a bull candle, right? Because look at the size of the wick. So buyers swooped in and took back control. Sellers almost took control, but buyers swooped in and took back control and pushed market back up here. Remember, it's like a war between the sellers and the buyers. Buyers are always going to try and push market up. Sellers are always going to try and push market back down. So it doesn't matter to you where it is. What matters to you is, am I in a sell? Who has control? Am I in a buy? Who has control over the market? Whoever has control is better for you, right? Obviously, if you're in a buy or a sell. Does that make sense? Please let me know inside the chat. Yeah? Okay, does that make sense? Mr. Kunal, does that make sense? Yeah, need to rewatch this part of the video to consolidate. Yeah, that's all right. No problem at all. Look, one thing you need to know as well is look, sellers are trying to take control, right? But what happened was buyers swooped in, okay? It comes shooting up. It smacked through this line here because there's one here, right? And then it came through this line here. Buyers tried to gain back control, but sellers, the force is strong with the sellers right now, right? So sellers are trying to push it back down. Okay, so let's go back and let's go and watch kill shot confirmations.
Okay. Welcome to day 4 of our boot camp. Okay. We are going to go through our full confirmations today. We're going to talk about the rules that we are supposed to be following before we take a trade. So these are confirmations that we're going to go over on why we take a trade, what we look for before we take a trade, and sort of the 5 rules that have been created to help you not only have success with kill shot, but also to eliminate some of the bad signals, right? So sometimes and most indicators here are not perfect, and they're going to have some good and some bad signals, right? So super simply, what we're going to show you are the kind of 5 questions you ask yourself, or the 5 rules we ask ourselves before we take a position. Okay, so a lot of things go into this. This is, when I first started this, all I had was the cross of the EMAs, right? All I had was the cross of the EMAs, and then I started to realize that if I just took every single cross of every single EMA, I'd have these really big days and win days and really big loss days. And while that's totally fine, right? While that's totally fine to have those days, right, and still be profitable, I wanted to just get to a place where the win rate was higher on kill shot. Okay, so what I did is I started to create rules. Some rules combined with these signals to give me a higher probability of outcome on those signals. Okay, so the first thing we want to talk about, we're going to talk a little bit about this table. Okay, so we're going to talk about this trend table that you can see, and I'd have to make it a little bigger in my settings, okay? But it's much larger on Nike charts, but this little table that we have here, okay? We're going to talk about why we use it, okay? So let's do this, okay? Let's go. The kill shot confirmations, okay? So the first question you're going to ask yourself is, are we on trend? Okay. So first thing you can see up here, okay, is this trend table. Now you can see on the trend, it says our trend is on the 1 minute up, 5 minute up, 15 down, 30 down, 4 hour down, and daily, or 4 hour up and daily up. So what this is essentially the same thing you see here, the cross of the fast and the slow EMAs, okay? The cross of the fast and the slow EMA, you see that on just a higher time frame, right? That's going to indicate, right? You can see that it was heading down and it was heading up, and you can see the trend in consolidation is not really moving, right? We trended a little bit more on Friday to close, right? We had this a little bit of a downtrend. And so what it is it's just giving you those crosses on a higher time frame, which is going to help us identify trend. Now, what trend should we be paying attention to? Right? What trend is it that's going to help us have the best result? Let's say we're trading in the one. And we talked about this, earlier this week when we talked about kind of top down analysis, right? We want to be 2 time frames up, right? So if we're trading on the one, we want to see what the trend is doing on the 15. If we're trading on the 5, we want to see what the trend is doing on the 30. If we're trading on the 15, we want to see what the trend is doing on the 4 hour. And if we're trading on the 30, we want to see what it's doing on the day. Now, of course, this was built to scalp because I'm a scalper, but it does work in higher time frames as well, combined with a few rules and those types of things, right? So the first confirmation is, are we on trend? That means that when I'm on the 1 minute, I want to get into a signal that matches this trend. That is going to increase my probability, right? And right now, the trend is down. So if we did get a sell signal, right, come on the other side of this 238, that would give us some of these rules, right? Give us these confirmations, okay? So the first one is, are we on trend? And right now, we would want to be waiting for this chart to match the 15-minute chart. Okay, so a sell would be on trend if a sell came. A buy came, was not actually on trend because our trend on the 15-minute is down. Okay, so looking for that 1 minute to match that 15. So if the 15 is down, we'd be looking for sells. And if the 15 is up, we'd be looking for buys. Okay, are we on trend? A simple, okay, yes or no. So once you look at it, you're like, okay, right? If I want to take a sell here, will I be on trend? Yes. Okay. Second one is the POC behind us. Okay. So one thing you're gonna see here, and yes, no. Okay. The one thing you're gonna see here is and I kind of described it a little bit earlier here this week, where I talk about this is like surfing, right? Where you paddle out and you're looking for your perfect wave. Well, if we paddle out and we're looking for our perfect wave, we don't want to get on a wave with a bunch of things in front of us, right? You don't want to get on the wave with a log in front of you or a rock or a shark. You guys can all laugh, but you can think about the things that are in front of you. You want to make sure that stuff's behind you so that the wave isn't going to push you into these things, right? So one thing we want to make sure is the POC behind us. Now, if this were to be a sell, as you can see, the POC is sitting here. If the chart were to move down and give us that sell signal, yes, the POC would be behind us. That means that the sellers would have control, right? And if it got back above this, that would mean the buyers had control. So is the POC behind us? Yes, it is. Right? If this was to come down, give us a sell signal, the POC would be behind us. Okay? Another thing to add on there, okay, is the 238 behind us. Okay? Is the 238 behind us? Now, if we were to get a sell here, this is because generally this is going to kind of reject off that 238, right? Okay. So if it shifts into this sell signal, we wouldn't want to get into the sell signal if it was right before that 238, right? Because that 238 is a rejection area, we want to make sure that that 238 isn't in our that 238 and rejected it. Would have been a big loss. Would have been a loss, right? On that buy. Now, if we were waiting for that sell, the sell would have been okay, right? Because the 238 behind us depends where that POC was because it's moved, right? We would wait to see if that 238 is also behind us. This means that the things that could potentially be reversal levels are behind us. And when they're behind us, we can also use them as protection on our stop loss, right? Like if we had a sell here, we dropped our stop loss back there, then also these things, if they're behind us, are usually in the way of the chart going back to the stop loss as well. right? So is the 238 behind you, right? On this sell, the 238 would have been behind us, right? Okay. Okay, those are our first three confirmations. If you get a yes, 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 okay, then we would shift to number four. This one is are we good trading? Okay, so we're going to talk a little bit more about this because we haven't talked about this yet this week. See this little window up here? It says good volume, bad volume. It's different on charts. So, good trading volume. What is trading volume? Go over this a little. Based off of the different timing. So things like Asia, it's going to be low volume. The Asia market, and that's when we tend it's Sunday. But if you go and look on like a Friday, it tends to consolidate in these lower volume areas. So we want to be finding our position and scalping with the market when the volume gives us those pushes, right? When the volume is high enough in this market, in this chart and market, that is going to give you those quick movements so that you can scalp it. So you can scalp in and out of the market, right? So you want to be in this market when the volume is higher because then those movements in the smaller market or in this lower time frame are going to move faster, right? You're going to move quicker in this higher time frame. 5 o'clock actually was a good time volume. You can see it's shifted here, right? So you would have come out of London, which would have been right up here. And then at 3 o'clock, right in this area is when volume shifted. You can see it consolidated in here, right? From 3 o'clock to 5 o'clock. Then when 5 o'clock came, it started a trend again. And so that's just me being in this chart, US30, and on this chart for 6+ years, almost 7 years, this month that I just noticed that the market moves differently between these volumes, and I've taken some time to understand the market opens and the market closes. So when London market opens, right at 11 o'clock, when London market opens, volatility picks up, right from about 11 o'clock here. You can see it's kind of consolidating here. At 11 o'clock picks, we have a nice sell, then a buy is good, then another buy is good. That volume picks up, okay? That volume picks up here in those times. Okay, so that's when we want to be looking on the smaller time frame for us to be able to join that market. Right, then London closes 3 to 5, a little bit of a slower consolidation, then bam, starts to trend again, and then this will go till about 1:30ish, and then change because you have half an hour before market closes, right before the volume kind of turns into. You'll also get a low volume right around open because that's when it gets. Difference is we want to be looking for good volume for the market to be trending with us. We want to be finding our opportunities to join the trend, right? Not to try and get into scalp and volatility because sometimes that always doesn't work for us. And volume is more important because when the volume is good, the market is trending. Okay. And when the volume isn't good, the market can consolidate or be volatile. Okay. So are we in good trading time? This will tell you yes or no. Okay. And the last one. Okay. 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 Does the candle match? Now, this isn't always perfect, but this is something that we need to be aware of, right? So something like this cell, right? This cell does eventually run, right? But we would have had to have been aware of it because it was a sell signal on a blue candle. Okay. And normally when that happens, it's reversing, at least just maybe just in a short period of time, just for like, maybe a couple minutes. You can see it's only a couple minutes long. It starts to move that direction again. But because we're looking for short-term movements, okay, and short-term trades and short-term targets, right? We want to make sure that in the short term, the market is moving the same direction we want to go. And if you get a signal like this, and this is just, like I said, me spending years and years and years with this, is that I found that if I took a signal where the candle didn't match, I tend to hit a stop loss, especially if my stop loss was small, right? So if you're using like a 25 pip stop, you don't really want it to be going the other direction when you enter the trade, right? Pretty good chance it would just wick your stop and then continue on its way. So we want to make sure that the candle matches the signal. You can see this thing wick down there. You got a few pips out of it. This thing broke above here. Actually got a shift there. But you want to make sure in these trading times that the candle, right, matches the signal. And all that is in that short term, okay? In that short term, the market is going the right way. Okay? So something super, super important here. These are all the questions you need to ask yourself. These are the questions that you need to get comfortable asking yourself before you trade. This is going to do a few things. Okay? This is going to do a few things here. The first thing it's going to do is it's going to slow you down. Everybody gets very impulsive. They see a signal, they want to jump in. This scanner is amazing, and this scanner, if you follow its rules, is going to keep your account profitable. But what's super important is that you're also doing some analysis. And when you put these questions up on the board, you're at very least asking some things of the chart. What does it want to do? Is it trending? Do the buyers or sellers have control of it? Is that 238, that little bit of longer EMA behind us? Are we in good trading volume? And does the candle match? Okay. Probabilities are all lined up. And we want to be able to take those. Those are the trades that are going to have the highest probability with our trading strategy. So it does two things, right? The first thing is it's going to slow you down and make you do some analyzing. And then the second thing is it increases your probability. And that is exactly what those rules were meant for. As I started to use this scanner and grow and grow and grow with it, I created more and more questions to ask. I created more probabilities because I knew that if I kept adding these things, and it's just, this doesn't come from just me pulling it out of my butt. This comes from me being on this strategy for so long that it's actually giving me, these were questions that I asked myself. These are the data that I went around, right? The first one is, why are we on trend? Why am I asking if I'm on trend? I don't know why. Because 90% of my losses came counter trend. They came with me just trying to take these trades, take every single one of them with no rules or parameters. So the first thing is why I added, are we on trend in there, is because 90% of my losses came counter trend. Okay. Number two, is the POC behind you? I realized that both the POC and the 238 became rejection areas. And if I made sure that those were behind me, that the chart wouldn't reverse off them. And when you're using a really tight stop loss, like if you're using a 25 or a 50 pip stop loss, you want to make sure that these things aren't in your way. Because this could reverse to you, hit that 50 pip stop loss, and then just go rip on its way, right? And both of these things were things that I noticed when I started using that volume control, that I realized that if it was behind me, the chart liked to move away from it. And the same thing with the 238. If it was behind me and the signal came, it liked to move away from these things. And so both of those questions were put in here because of the data combined with this strategy, right? Okay. Are we in good trading volume? This was a battle, so you guys understand, this was a battle for me to figure out how to avoid consolidation. Because what happens is when you're kind of between markets and London isn't flying and New York isn't flying, right? And Asia is a little bit of a lower volume in these markets, the market would consolidate. So instead of me going, hey guys, you need to figure out how to identify consolidation, I was like, what if we just took these times away? And I realized once I started to audit and look at consolidation and why it was happening, I realized it was happening between markets, right? Between London and New York. London would pop open, volume would pick up, everybody would get going, and then it would go into a lull and wait for US 30 to open. That doesn't mean it can't happen, but the majority of the times it doesn't. Right? I realized that in Asia because I had automation and all these things testing that, I would just run 24 hours a day taking all the kill shot signals. I realized that the that Asia market came with a lot of losses. They were small, but they came with a lot of losses because the volume wasn't pushing it far enough. Right? To get to those, even 20 pips, 30 pips, right? It would go 10 and reverse to 10 and go to 10 and reverse to 10 because there was no volume to help the market trend. And so I decided instead of trying to teach everybody how to identify consolidation, that I could just create a time clock that said, hey, pretty likely in this time period, the market will consolidate. And that's why I tend to leave those trading times alone. Okay, and number 5, okay, does the candle match? Now, once again, I've realized trading in here that if I took a trade with a candle on the opposite color, I tend to take a loss. And so I was like, okay, well, let's add that rule in there. I would rather take 5 signals in a week and have higher probability than take 40 and go 50-50. Right? So what I did was I took the data and I refined it. And that's what all these questions do. Okay, they refine your data. Now on an easier to understand scale, it's just questions you ask the market. And you might laugh a little bit here, but it's like, the example I give is like trying to, ask your wife what she wants to eat. Do you want to go here? What are you feeling? When's the last time you had this? Right? And then you can decipher which place we're going to go. Right? So all these questions, they may seem very simple to anybody who comes to these things. They all are refining your data. Okay? Okay? We're all refining data to have a higher probability of outcome. And that's all these questions do. And they're going to teach you to ask questions of the market. And they're going to teach you to ask kill shot questions as well. Have you done this? Have you done that? And that's what's super, super important about these rules and confirmations. Okay? So I'm going to leave them up on the chart. You guys are welcome to take a little screenshot of those confirmations. And that will be bootcamp number 4. Tomorrow we'll be going how to use, how to trail, and our assets. How to use it on different assets. How to use it on US 30, how to use it on NAS, how to use it on gold, how to use it on BTC, how to use it on all those things so that you can, whatever asset you're trading on, you can have the best absolutely result. Okay? Okay? So everybody have a wonderful, wonderful day, and we will see you tomorrow for bootcamp number 5.
Wow, wow, wow. All right, how is that one there, guys? How do you feel about that one? I think that was incredible. I took loads of notes. Can you guys still hear me? Yeah, very good, very good, very good. I think that is super, super important. Yeah, of course. Like, again, repetition is the key to success, my lovely, right? So the more you watch, okay, the more you are going to become very, 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 very good and successful at this. I don't know if you've heard this story. When I first started in this industry, okay, working with someone who was very young. He was 19, and while he was learning, he saved up 5K, okay? And he went over the information 10, it was either 10 or 11 or 12 times, something like that. It was over 10. He went over and over and over the information, okay? And after that, he then went live. He started to grasp the concept. He started to be able to, he went live with his 5K. He started to be able to raise his lot sizes up because he knew moves that he was going to take in the market, solid moves. Now, this is what Killshot and these scanners can do for you guys, right? Now, no, I know, right? But listen, now what I'm saying is he went over the information again and again and again until it made sense. You drive a car, you learn how to drive a car until you can drive that car, right? Do you see? The things you learn it until you can do it. And the more you do it, the more you learn it. Okay? Anyway, he put 5K in his account. He flipped that 5K, yeah, to, I think it was 23,000. He took out his profit. He left 5K back in there. He then took that 5K and flipped it to 95,000. He did the same thing. He then flipped his next account to 233,000. He did the same thing again. He flipped an account to almost 500,000. This guy became a multi-millionaire before he was 25, right? All because he took seriously his ability to learn. And then do you know what he did after that? Well, actually before that, what he did before that is he became one of the biggest leaders out in the Czech Republic. Okay? Because he's from the Czech Republic. He became one of the biggest leaders out in the Czech Republic and pretty much recruited about a quarter of the population, I'm telling you. It must have been. Because he understood the power of what he had in his hands. Right? And he just told people what he did. People followed him. And he became a multi-millionaire in trading and also became a millionaire because he just shared the business. Right? Incredible, yeah? Do you understand? If we just keep going through the information together, what this will do for you guys as well. He was so excited and so happy and so blessed. And, you know, that's what I want for you guys. Told you, this is what we are working for here, right? There is hope for all of you. Every single one of you. Everyone. Don't take for granted what you have in your hands. You have a very powerful system. Look at Jay. He's got a football team of kids. Right? And he is the easiest man to get hold of. He's an 8-figure trader. And yet he is the easiest man to get hold of. You see how he only does small pips. 10, 20, 30, 40, 50 pips. But you see them 10, 20, 30, 40, 50 pips is probably making him more than some people's yearly salary. Because he can now stick his lot sizes up very high and take them positions. That is what it's going to be like for you guys. Right? As long as you plug in. As long as you plug in. Now, look at what market did. Let's have a look what market did. Oh, look. Would you look at that? Look at where market went. We should have all jumped in for a sell, guys, while we was on that session. It went exactly... Oh, my gosh. Right. Anyway, my point is, what you should do is have on your chart exactly what he had wrote on his chart. Make sure that every single time you are placing a trade, you are checking, right? Please have it wrote on your chart, okay? Easy to do, okay? Simple. Just have it wrote down on your chart so that you are checking your confirmations, right? Here, you see? Have it in fancy little writing if you like. You can have it in any color, but make sure that you are checking your confirmations, right? That you are ticking them off, okay? Because like he said, what that is going to do is that is going to help you. That is going to give you bigger, better, higher probability results. Okay? It is going to slow you down from being a tap, 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 tapper, right? And tapping the market, tapping the button, taking the trades. You are going to confirm every single trade. Now, if we were to try and take this position, right, we wouldn't really have a confirmation because A, market is low. B, it's for a sell anyway. Okay, even though it's come down massively. For a sell, we're above the POC, but we're also below this. So we're kind of in between, right? Now that is if we're trading the kill shot way, right? So we have got the kill shot way to trade, and we've got Caroline's way to trade. Okay, so it doesn't matter. We've always got ways to trade. Okay, so we've got a solid way to trade with kill shot, and we've got a solid way to trade with the way that I trade. Okay, so them two combined with a DeFi, it's a game changer, guys, right? Do you agree? 100%. 100,000%. Okay. So we're going to keep plugging in. We're going to keep going through this. We're going to keep making sure. Okay. Again, are we on trend? Is the POC behind us? Okay. Is the 238 behind us? Are we in good trading volume? Does the candle match? Right? Did that question, the candle match? Do you get that part? Do you understand the candle match? Yeah? Not really? Candle match. Right? Red candle. Yeah? Red candle, red triangle. Candle match. Right? Maybe this isn't a good idea to do it on this one because it's probably a little bit thingy. Look, candle match, red, red. Candle match, blue with the green, right? That is what he means by candle match. If you get a signal that comes through and it is not matching, you don't want to take it. That's a match. I'm just trying to see if there's any that doesn't match, but that matches. Okay, well, you get the gist, right? If that was on a green candle, that wouldn't match, okay? So that is what he means by candle match, okay? And yeah, I mean, they're pretty straightforward, right? Do you think that it's easy now for you to be able to trade using this? And the more you learn, the more you understand about support and resistance and volume and everything, you know, fair value gaps, order blocks. Yeah, the green and blue match, right? Green indicates buy, blue indicates buy. Yeah. Okay. So as long as you get the candle match, that's it. Okay, solid. Solid, 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 solid. I'm happy. Are you guys happy with tonight's session? As long as you guys are happy, so am I. Okay, perfect. You are very welcome, my lovely. All right. Let's go to bed. All right, guys. Okay, so we will be back again tomorrow. It will get easier the more we do it. 100%, 100%. Like I said, guys, this is an everyday occurrence. Okay? Every day. All right, for some, in work till 8 a.m. Dang, I don't think I could stay awake till 8 a.m. But I will think about you. I will think about you before I go to sleep. Okay, perfect. Right. So, and you will, my lovely, you will retire. Okay. So I will see you guys again tomorrow for our trading sessions and everything else. All right. So I'll see you all in the chat. Appreciate you all. And yeah, you are most welcome. And yeah, I look forward to our next trading session, and I look forward to our next study group session. So I will see you all tomorrow. Have a beautiful, blessed rest of your evening, night, sleep, everything else, and yeah, excited.